Yes, we are back. It has been a while.
Don't call it a comeback.
That's right, I have been here for years. So excited to be back. Got lots to talk about. What does the market look like recently? Yep, just like that. Really hasn't been able to go anywhere, although some sectors are starting to break out. Seeing some good things, seeing some bad things, but as always, lots to talk about. Let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First up, first time here. I am a practicing financial advisor. What you see here, we like to apply to our portfolios and our practice. So if you like what you see, please do subscribe, hit that like button and all those other things. So, has been a while. Feels like we've been what? Spinning wheels here for really the last 6-7 weeks. A lot going on though underneath. Also not surprising because of the big run up. So as always, we're going to go through the charts, talk about where we are in the cycles, sector spotlight, what keeps me up at night, and game plan going forward. Let's go to the big charts. Before I get into the charts, you have to understand I show indexes, okay? You can't buy these indexes. We'll have a disclosure at the end. You have to understand that this is what I'm allowed to show from a compliance standpoint. You know, we utilize ETFs and stocks, but what you see here, the performance, the holdings, may not be 100%. So it's up to you to check. Of course, I do for our clients, but for our viewers, make sure you do that. All right, so first out is going to be the Ooda Loop. I talk about this a lot. Observe, orient, decide, and act. And that's exactly what we've done over these last few weeks. Really haven't seen a lot of movement, a lot of trades, because it's kind of in a directionless market, as I discussed in the opening. So let's take a look at some of the charts here and see where we stand. So the first one is going to be the monthly view. Still very much positive when you take a look here. Okay, obviously this is broken out, has held strong. I talk about negative divergence sometimes, which is relative strength when you hit a high and then it goes lower. Well, now we broke above that trend line. That is, in fact, positive. So I think that's a good sign. Long term, our outlook is still positive. Then you take a look at the weekly chart. Okay, what do you see here? Relative strength has stayed strong. Okay, there's your trend line, stayed above it, but definitely consolidating, not seeing much there. And then down here, just haven't done much with the momentum. Okay, and there's a couple things, I'll talk about that in a second, which don't really surprise me. So let's look at short term. By the way, that's positive. Let's look at short term, and it's sloppy, okay? There's not a lot going on right here, okay? We've kind of been up, we hit a high, came down. That's actually a new, let me clean that up. That one right there is actually a new all-time high. So was that the other day, okay? We're kind of meandering along right now. But despite all that, I do see something positive forming here. So let's talk about that. We're looking at right now Volatility Index and the S&P, okay? Here's your VIX last year when it went through the roof, okay? And then that is a lower high, lower high, lower high, lower high, lower high. All of that is positive, meaning that is showing you from a trend standpoint, it's going lower. So volatility, VIX, and today you're under 20 again. That's a good sign. And then at the same time, you look at the S&P, and what do you have, right? A series of higher lows. The opposite, which again shows a bullish sign, okay? So that is good. Short term, we're neutral with a bias, hopefully, to the upside. So one of the big issues we've had is the Nasdaq, right? What has happened? Tech has driven this market, but not right now. When you look at the FANGs, they've lost their bite, okay? And if we don't get those FANGs going again, I'm not sure where this market's going to go. But here, right, there's your negative divergence. Nothing's happening there. Don't like that, okay? Then you look at the charts. There's your highs. And we're kind of just stuck. Nothing is going on there. Same thing with momentum, okay? Now, is there anything at all I see positive here? Well, down at the bottom is the volatility index for just the Nasdaq, and it is coming down. So you're getting a series of lower highs. So hopefully that is an indication that we can finally see a breakout on tech. Have not seen it quite yet. Okay, and this is kind of confirmation on that. This shows Nasdaq relative to the S&P, meaning basically performance divided by each, right? So we had a big breakout. This is a trend line from 2000. We broke above it, and now it looks like we're ready to go back below it. So again, I am really kind of looking at this, being patient. We had reduced our tech holdings. I want to add more, but I just don't see it. So at this point, I have not. So, the big story recently has been Treasuries. Okay, everyone's talking about it. Oh my gosh. Yes, we hit a cycle high. We're in cycle 2 right now. Cycle 3 is a time to own Treasuries. But when you look, right, that is clearly a straight move to the upside. Now, we hit 173, 174 today. And a lot of people are worried about that tech more than anybody. So, but when a 10-year Treasury goes up, it actually means that we are, in fact, growing. And the same thing goes for the yield curve. I talked about this when we're heading towards recession, except the opposite. When the 10-year minus a 2-year Treasury goes below zero, that's a recession, okay? And we did see that, and we had that, albeit very short because of Fed intervention. And now we're going up, which tells us we are in growth mode. Let's go to Sector Spotlight. All right, so first up is the dollar. Get the dollar right, get a lot of things right. Cycle 2, as you see the dollar go down. But we got this little thing going on, and that has really created a lot of issues here in cycle 2 and in the market. So we're getting close. We have not broken trend yet. That is something I'm looking for. Follow us on Facebook, and I'll make sure to update if I do see that, okay? So when you look at the dollar, where does it affect it, right? Dollar down, inflation goes up. So here's oil, right? One of the big benefactors of inflation. Now, a couple things here that I look for, right? Price volume volatility. So the volatility has gone down quite a bit. Had a spike, it's coming down. I like that, okay? We're at 41. I want to see us below 35. Hopefully that'll get us that push that I think we should get. By the way, I think next week, after quarter end, some Fed stuff, some data, I think we see the dollar go lower. TBD, of course. We'll see what happens. Now, a lot of our process is getting in, right? We're looking at it. And then also, I'll buy, I'll trim, I sell, I rebuy. Now, there's consequences to that, okay? Taxes. If you're an IRA, retirement account, you don't have to worry about that. In a non-retirement account, of course, we're very mindful of that. So think about that, especially with the sectors, because we do go in and out. So right now, not a good looking chart, okay? But we have not broken trend, okay? We're still in an uptrend, which again, for me, keeps us positive on oil. Now the dollar, with the dollar down, prices get better in emerging markets. And we've struggled here, again, because of the dollar with that counter trend move. So we're going to see what happens here. You can see it going down. Not good. Looks like we found a bottom. Okay, let me clean this up real quick. Go over. And you can kind of go across. So we've got a decent bottom here. Let's see what happens. Now, although it's not emerging anymore, China is kind of the big dog as it pertains to emerging markets. So that has been a big issue, okay? And you can see where it peaked, and then it just kept on going down and down and down. Seeing a little bit of life here. Don't anticipate to see a change, especially if we see our dollar go back down again next week. But this is really what you have to follow. But that's another reason why we don't necessarily buy emerging markets by itself. We'd like to buy individual countries, okay? Now, a benefactor of rising interest rates that we saw with the 10-year are the banks, okay? Again, disclosure, look at it. I might go in and out a few times, but I do it in the IRAs. I'm not worried about that tax consequence, and I am very much so outside of the IRA. So you have to consider that, okay? Now, the other thing is that I look for here, you see your 10-year Treasury going up, okay? And then also This is banks relative to the S&P. And you can see banks have outperformed the S&P. That's what I look for. So that's why I've continued to like banks. I think interest rates, not interest rates. Treasuries go higher. Who benefits more than banks? Not sure who. So next up, semiconductors. Now there's been a big shortage, but tech is taking a breather right now. This is one of those things, when I go through these videos, we're not always right. You got to be patient. Okay, at this point, getting into this has not been good for us. Okay, and we have to be mindful of that. Okay, but I still like semiconductors. They're in everything, right? And especially with the shortage, I still think that there is, in fact, an opportunity there. Next up, what keeps me up at night? All right, real quick, let's go through the cycles, all right? If you're new here, we just did a video on understanding the cycles, specifically cycle 2, okay? You can click and watch that. Really happy with that. Now, we have been in cycle 2 for now. Growth accelerates, inflation, Fed is very hawkish. Obviously, we're seeing that. We do feel that changes over time, and we're looking at cycle 4, which we'll get into and do a video at that time. So now let's take a look at what does keep me up at night. All right, so first up, look at the big boys, institutional managers. They are currently not in the market. You're looking at 57% exposure. Very interesting to see something that small. Now, price discovery. So here you've got Janet Yellen and Jerome Powell. With all of this money being pumped in the system, things have gotten crazy as far as valuations and everything else, and you have to be careful, right? Big news this week, a hedge fund had a big margin call, biggest margin call since 2008. And the reality is, like I said, right, that's because it's drunk on risk. These people were taking on too much risk. This particular hedge fund got caught and had to sell to meet margin, okay? Very interesting as we go forward. Now, no matter what, I keep reminding everybody, yes, this market has gone up, but it is the most overvalued market in history. What do I mean by that? Well, when you take a look here, 20, okay, PE is overvalued. 15 is the medium average over the long term. If we were to get to 20, that would be 1964 on the S&P, which we're looking at a 50% correction. If we were able to get back to fair value of 15, 1473, that's 63%. Not saying it's going to happen, but that gives you an idea of how overvalued this market is, all right? So what's next? Couple things, right? You got to be patient and be smart right now. Very choppy. Sometimes it's better being on the sidelines, raise some cash, etc. Okay? Opportunities, right? Be smart with those and be very selective. You got to be careful. I've got charts upon charts of things, stocks, ETFs. I'm not pulling the trigger because nothing is really going anywhere at this point. Volume and volatility, right? Volume has been really low lately, okay? And volatility has been lower, meaning below 20, which is generally a buy signal. So very interesting. Continue to watch that. And if the cycle changes, we're going to announce that probably on Facebook and our other platforms. So make sure you follow us there. Michael Loftus, Wealth and Wisdom TV.